On the podcast with us today is Vinney Chopra. Vinny, welcome to the podcast.
Thank you. Thank you, Dan. It's a pleasure to be back with you. I'm so impressed with where you are, and you and Danae have just taken the whole USA by storm. Congratulations.
Well, thank you very much, Vinny. And I remember the first time that you and I met in Atlanta, Georgia. We shared the stage together at an
Yes.
event, and that was my first introduction to you. And you have a very addicting personality, a very addicting smile, and that's why people call you Vinney Smiles Chopra. And every time I think about you or see your face or meet you in person, I just get a big smile on my face as well. So I'm
Oh
I'm
my God.
looking forward to today.
Thank you. Thank you, Dan. Gosh, this started about 40 years back. Can you believe it? My middle name is Kumar, but then my friends took that Kumar out and put Smile in there. And in parentheses, I've kept it like that for 40 years.
Well, I can definitely tell why, and it's amazing that your smile continues to stay for 40 years. But I really, if any of you who are listening have not actually met Vinny in person, if you ever have the opportunity, you should, because he definitely has a very addicting smile and addicting personality, and I enjoy being around him. And I'm looking forward to today's interview on this particular property that he acquired called Azalea Court. So talk to us a little bit first, Vinny, about your background as a syndicator and as all your experience when it comes to multifamily investing, and then we'll dive into this Azalea Court, maybe how you found the deal first.
Sure, Dan. Actually, I'm an engineer, mechanical engineer from India. I always wanted to break toys and put them together, and so I became mechanical engineer. I don't know if that has to do, but after I worked with Larsen Toubro in Bombay, I always had a desire to become a manager, supervisor. And I thought MBA, Masters in Business Administration, will get me that. So that's when I came to this country with $7 in my pockets. That's all you could bring at that time. Majority of the people who come on student visa and so forth. And I sold Bible and encyclopedias right there outside Atlanta and Georgia, right there, Pulaski, Virginia, and Aiken, South Carolina, actually, 3 summers, and went to George Washington University. And after that, I just found that I'm more outgoing person rather than sitting behind the desk. So that's when I changed my life and closed down my engineering chapter, but went into sales and marketing and promotions as a promotional consultant with a very beautiful company. Stayed with them long time out of Tennessee, and retired from there. My stocks went way high, 67x actually.
Wow.
So that really helped a lot to get cash going. But we were actually investing in single family homes, by the way, over 30 years. Every time we could save money, we would just get a rental home. And we had them all over USA. What really hit me was about 2004. That's almost 14, 15 years back now. I became broker in California. I live near San Francisco. And that's when I said, what should I do with this brokerage? Should I open a shop, a brokerage house, selling and buying homes, or is there something different? So I looked into leasing of the office spaces and a lot of other stuff. But multifamily caught my attention. This is 2004 now. And that's what changed my whole career, life, or whatever you want to say. And that's what I've been doing. I learned the business right from ground up. And then we formed a company with a partner, and it took us a long time. I mean, I want audience to know where I am today. It didn't happen overnight. We had to learn and go to boot camps and, go through coaching and training and all that to get the skills and everything to, and have the persistence, because it took us 9 to 11 months to just get our first property. So many times people feel like they could do it tonight or overnight, and I can leave a job, right away. It doesn't happen. I mean, very, very less percentage. It might happen, but not that. But that's where we started. And, we started with 14 units. A lot of people do that with duplex, fourplex, sixplex, eightplex. We started with 14. And then luckily, at that time, nobody gave us any loans, by the way. It was the worst time in 2007 and 8. It's right there now. And then we got seller financing. And the seller also did not give us the money, like 80-20 rule, LTV. He wanted actually 40% down. So, things like that. And we just overcame all those problems, challenges, raised 1.1 million, I remember, for the 109 units and 101 storage units. We had that property. Again, it just coming back to me now. We gave 43.3% IRR to our investors.
Wow.
We kept that property. It was called Buena Vista Garden, by the way. It used to be called Palm Avenue or Palm Garden. We changed the name always, of the property, especially if we are repositioning it, then we change the name right away. Even the LLCs are formed with that name and so forth. Mm-hmm. So just mouthful of all these things to say that, we closed one deal on Monday, 14 units. Can you believe it? We didn't have to raise money for that. But then the Friday, we closed the other one, 109 units. And wow, along with 101 storage units, all in one, 2.33 acre land, there in Texas. So Texas was, I'm sorry, go ahead, please.
No, I was going to say, when you were doing that in the very beginning, were you still working as a mechanical engineer?
Actually, I was working as a promotional consultant. I was district director. I moved. We got married 38 years back, 39 now, coming up next year.
Congratulations.
Thank you. And we moved also to San Francisco area. My company moved us from Ohio. We used to be in Findlay, Ohio, Bowling Green, Ohio. And then they wanted to open up the whole West Coast. That's when I came out here. And luckily, God, gave us the strength to get started, right from scratch. We were a young married couple at that time, and we have 2 children now. They went to Berkeley and UCLA, and Neil and Monica. That's why our company's name is Monil. That's Monica and Neil kind of put together.
Mm-hmm. Oh, yeah. Well, I want to dive into this one, which is called Azalea Court. And this one is located in Freeport, Texas.
Yes.
I want you to start us off by talking to us about how you found this particular deal, and also going over some of the specifics about like the number of units, the acreages, and all that kind of stuff.
Totally, Dan. Actually, I have like 5 companies now, but 2 old ones were with my partner. We did 14 syndications in that one. We have sold 12 already, full round circle. 2 more are being sold right now. But then I started a company in 2014, by the way, only 4 years back. And I bought one property, Albion, close to this property on November the 19th, by the way, of 2014. And this one I closed on December 22nd of 2014. Now, Azalea Court has a really great meaning to me because what happened was in Angleton, Texas, is one of my other properties. This is about 15 minutes away. 15 or 20 minutes away, small town. And I looked at the emerging jobs and everything, made really sense for me to buy in Freeport. And I found another property, 154 units, I think it was. And I put an LOI on it. Later on, I found out from the broker that my partner also was seeing the same property because we had made a decision that we are going to split up, and we're going to have our own 100% ownership companies. This was happening like in 2012, I think, or 13, something like that. So it took us a couple of years to keep on selling the other assets and then doing our own expansion of the businesses and things like that. So I found out that the seller signed both the LOIs. My price was a little bit higher, but when the broker told me that, I said, it's just not right, because if she was there, she had been going there and everything. I want to back out. I don't want to buy that property. because, I just didn't want, because she got there first. I always believe in that. When even the broker brings me the property, like a pocket listing or napkin listing, I call it, I always go to the first broker, because that's where you have to have the integrity. That way you are just doing the same thing over and over. Everybody understands who you are. And that's what I've done. I bought 10 properties right around the neighborhood, by the way. Kept on buying in 2014, then 15 I bought, February 22nd, I think. No, February, I forget the date now, but 2015, and then every 2, 3, 4 months, I was syndicating. But let's talk to Azalea Court. What happened was I backed out of the other property, 154 units, which was much higher price and everything. Within an hour or so, I was driving in the car. The broker said, Vinny, you're not going to believe it. I just got an off-market deal, and it's a great deal. It's 156 units, more than the other one, but 16 units are burnt. I said, oh my gosh, what are you talking about? You mean totally burnt? He said, well, some of the fire happened in the top floor, and it gutted out a lot of units on the top. Some of the bottom ones are still there. So I said, how much you think? I'm just driving, right? And they said, offer 3 million only for 140 units working, and they were occupied pretty strongly, but 16 were burned. I said, okay, go for it. So they put together an LOI on my behalf. I'm in the car. They sent it to me. I signed it, DocuSign or Easy Sign, on my iPhone, and I sent it right back. And within about 45 minutes, then the sellers agreed to 3.550, 500,000 more than 3 million. And that is where, I said, okay, let's go for it. And that's how I got it.
So it's 140 units that had an additional 16 units that were down. So at the end of the day, it was 156 units.
Exactly. And I knew that, I had never really done rehab of those many burnt units, but I knew that, once I sat down with the contractors in the Houston area and so forth, I'll be able to get 3 bids. That was my logical thinking, and get a good general contractor who could build it back up, That's how it was. But later on, I found out, by the way, Dan, that the sellers got $1 million from their insurance company. So they gave me a break. I was wondering, why are they selling me so cheap? So I think I saved almost 700,000. They gave me a break for that. They just didn't want to. And later on, I found out the sellers were from San Anselmo, 45 minutes from where I live today, right here, near San Francisco. They just didn't want to. That was the only property, and they just didn't want to, go there and do renovations and spend another year or something, I thought,
So how did you, obviously you found this, you didn't have to compete with anybody else, because
No.
It was basically just submit the LOI, they signed it, got the contract on it. Did you have to put any earnest money up?
I did. Usually I put 1%, and that's the norm of the industry. Is like, if it's a 3 million, you just pay 30,000. I think I paid 30 or 35,000 in this one, because it was 3.5 million. And then I remember, while we were going from LOI stage to the contract stage, usually takes 3 to 5 to 7 days, the seller wanted to increase the price to 3.6 million.
Did you actually do that?
It should not have happened. But then, I thought, I'm getting it so cheap. I don't want to really. So I talked to my broker. I said, let's go in the middle. So, it went from 3.5 to 3.6. Let's go 3.550. They agreed to it. The seller agreed and I agreed. I said, that's fine. Let's do it.
Yeah. Well, that's good. So as far as the earnest money on this particular project, did it go hard day one, or did you have that 30 days due diligence, or how was that handled?
30 days due diligence. See, back in 2014, I'm talking now, right? That's about 4 years back. The market was different. It really was. It was not as hot as I've seen it now in 2017, 18, and it has been really, really hot, as you all know. I mean, everybody knows in all emerging markets, a lot more investors have come in, a lot more syndicators have come in, and some people are overpaying. Actually, I kind of frown upon that, to be truthful. I've seen some deals being closed, and which is kind of tough because with the interest rates where they are and where the adjustment will be coming, that will, might pose some problems. But you're right. No, in this case, I got 30-day due diligence. I did. No hard money upfront at all. And then I think after 30 days, also, my money was never hard, by the way, up to the closing in this case. I did get always in my contract, I go for 2 extensions. That's a good one. Everybody should always get 2 extensions written in, and the seller usually agrees with them. So you just pay them $5,000 or something, which is going to go towards your down payment anyway, but then extend it just in case if the lender needs it, or insurance, or phase 1 study, environmental study, anything can happen. So it's good to have that 30 days to 75-day closing if they want to really hit you with that, or 90-day closing. So it's better to do 30 days or 21 days, depending on, due diligence, but go for as long time. It's good to ask for more. Why not, right?
Yeah.
If you can close earlier, that's a better way.
So on each one of these extensions you're asking for, are they 2-week or 30-day extensions, or how do those usually go?
2 weeks. 2 weeks. Always 2 weeks. I think it's best to just go for 2 weeks and 2 weeks, because that way they'll give you 30 days. Now, if everything is going fine, I have closed in my career properties in 4 months, in 6 months also. I think I had 3 properties, I think they went 6 months due to so many other circumstances, right? So then you keep on giving a little bit more. And then if the seller knows that you are sincere, that you are not really stringing them along, right? And then you are also giving them more money, maybe even hard money. I know in one of the deals, Mariposa, we bought for $5.5 million in San Antonio. I'm just thinking we sold for $8 million, right? But that deal had $250,000 hard money. Then, but we
That's
kept
a lot of hard money.
I know, a lot of hard money. I mean, we would have lost, And the worst thing was, I'll tell your audience that our main key sponsor backed out. Oh my gosh.
Oh,
So
wow.
we've gone through all these ups and downs, in our lifetime. Yeah.
So on this particular project, it sounds to me like you probably toured the property after you got it under contract, or you got it under LOI.
Totally. I had only seen the other property which I backed out on. So I knew the city and so forth. I had not seen this project at all, to be truthful. And then I just said, you know what, if I'm paying $6 million or 5.5 or whatever I was paying there, I said, this seems like a very good deal. I mean, I just took a gut feeling, and I said, okay, let's go for it. So then after that I saw. Yes.
So during the due diligence process,
yes.
What kind of things came up that maybe you didn't know before? Like obviously you knew about the 16 burned units, but was there anything else that kind of came up that was, kind of I'm glad we did a due diligence a little bit deeper on this one?
Surely. In the due diligence, of course, I hired a company, because I had just started a brand new company right in that area. So I didn't want to take my managers from Albion, which is another property, which is very, very exciting news too, by the way. I paid 8.7. I think it's worth 12 million right now, 12.3, 12.4
Wow.
Right now, and it's cash flowing 45,000 a month, net,
Wow.
So very exciting, news on that one. And the good part is that was my first property in my new company. This is my second. But what happened was I hired an outside company. See, I always believe in looking out for good due diligence, company, it's worth to pay them $30 a unit, to go into each unit, and they have all these frames and everything. They write down all the information, what's inside, how are the appliances, what's the interior look like, the cabinets, conditions, the flooring, all that, right? And this way you could get a good reading. Also, when they do the lease audit, they put that huge worksheet. I mean, every resident, where they work, who are their children's name and their company's name, and when the lease, signed up and expired, and all that deposit. So I had due diligence company locally to come out from Texas, by the way. They did my due diligence on the first one also, Albion, and then I hired them again to come to this one. And what did I find? Found that the swing pool, the scrimmage pump, and all that, they were kind of clogged up, and we found interiors, of course, renovations to be done, faucets, under the balconies and all that, doing the exterior. The roof was good. That was a good thing. The seller had put a roof, or somebody they bought it from, 4 years old only, 4.5 years. So that was pitched roof, very nice, wonderful. And outside stuff, the brick was looking good, all that. I would say termite, when I did the pest control, they gave me a report, and they gave me like $2,983 or something invoice to do it. And I asked it from the seller. So it's good to have a repair letter ready. And I teach that quite a lot now, because since then I have gotten repair credit of $250,000 and $450,000 at the closing, by the way,
Wow.
in my other acquisitions. So it's very good idea to start building the repair list, and take a lot of pictures and put them in a Dropbox. Because that is the key. You got to back it up. If you come across certain things which are code violations or different things or like that, or hazardous, you got to start documenting them, and then start a list of repair letter items, and start talking to the seller way before the due diligence time completes. See, that's the thing. A lot of people sometimes might be feeling, I need to give it a couple of days before my 30 days. You know what I mean? But that's not correct. We need to actually give that repair letter on the 15th day even, start the dialogue.
Mm-hmm.
Because if the seller has a couple of days left, and if they gave you a pretty good deal, they might just not accept your repair letter, right?
Mm-hmm.
Then it's up to you to go ahead with the deal or cancel it out, right?
Mm-hmm.
Yeah, so that is a good thing. So in this case, of course, the pest control came to my mind. I remember it's been good 4 years back now. And then some more money they gave me, very little money, for some of the interior. There were some things in the bathrooms, things like that. Of course, the other thing which I wrote on this one was, they promised me, the seller said, the depreciation amount of $181,000 I will get when I build the building.
Wow.
So see, the thing is, their insurance will only pay them so much money, but they were going to keep a portion, which was $181,000, if I remember correctly. And then my attorney, Milton Colgrove, and I showed him the whole thing. He says, Vinny, you will not see that money. Do you want this deal without seeing that $181,000? Because this might take a year or year and a half. And by that time, the seller is gone. The seller is already out. It's their insurance company. So it's very unlikely you're going to get that money. Mm-hmm. So this was a decision which was easy for me to make, to be truthful, because I thought I'm getting such a good rebate on the purchase price. So if I get $181,000 to repair my building, great. If I don't, that's okay too.
Mm-hmm. So what was your initial going in capital or CapEx budget on this particular project?
To be truthful, in this one, Wait a minute. Okay, I should look at it. I should have looked at it total. Uh, did I raise the money um, to build it back? I'm sorry. I should have thought about reading it in my executive summary. Actually, I
So I
did.
have the underwriting summary here in front of me,
You
and it
do.
says that the renovation / upgrade reserve was 450,000.
There we go.
Is that what it was?
Yeah. So I have always tried to raise that money from my investors,
Mm-hmm.
So like over here, it says I raised like 1.7 or something million.
Yep.
I just saw. And renovation upgrade reserve 450. I'm looking at the brochure now. You're right. My cap rate was 11.27. Got it. Debt coverage ratio 2.83. Cash on cash. First year was 13.6. Fabulous.
It's a beautiful deal.
I did raise 450, but it cost me, by the way, 761,000, I think. 761.
Is that what it cost to get the 16 units back online?
Exactly. And I do want to mention a little bit something on that regard too. I disputed the last payment from me to the general contractor because the contractor took longer time. We always hear that, right? Renovations take maybe 30% more money,
Yep.
budgets with a change of orders or whatever, or all the different, obstacles that challenges come through, right?
Yep.
The other part is that the money, the time, it takes 30% more, and the money also, you just don't uncover everything, right? So essentially what I found was my last payment of 106,000 or 107,000 was left out of the 761. We went into mediation, by the way. I didn't pay, then they filed a, suit or whatever. And then we knew that, and they knew it, that they had also done wrong, So it's good to have that muscle. And it all comes with having a good attorney, good real estate attorney and litigation attorney, I call it, right? Who can advise you. So this way I was able to settle that 106 or 126,000 for 50,000, by the way, 50,000.
Yeah.
So
this was a contractor that you hired to do the renovations to get these 16 units back online. They originally quoted you 450.
No. They quoted me 700 something, 16,000 plus, then added more to 761, if I remember correctly, because of sprinkler system. I told them to check with the building codes if we need a sprinkler system in these 16 units. And they didn't do that. And then later on, we found out we had to do it, even though the rest of the property doesn't have it. And one of the big caveat was, which I had thought through beforehand too, was that this new 16 units, Dan, will be granite tops, molded ceilings, tile tubs, all that stuff, right? And the nice, the flooring and all that, and brand new staircases and all that stuff. So I could sell the property where you could increase the rent, right? Increase one bedroom rent from, I think I bought it at 400. Now we are charging 700 something. So it's gone up by $300. And in these newly formed units in one building, our rents are 800 something, So I was able to sell to the new purchaser, because I'm selling this property now after 4 years, right? We might go into that, and at a very good price, which is a good thing for the buyer to know. If they renovated the rest of the 140, like this one, interior wise, with granite tops and all, that's going to increase the NOI and increase the value. Yeah.
You basically had a built-in business plan already proven for the new for the new buyer.
Yeah, exactly. Once you do that, which is very true. I think I'm sure a lot of your audience, they look at it, a lot of the sellers do few units and show the rent increase and kind of do it as an example. If new person came in, they'll be able to renovate also, and the market can bring that extra rent, right?
Yeah.
200, 250, 300, that multiplying by 12, that, and then multiply by the cap rate, it just increases the value, so high. Like I'm selling this for 8.5 or something, this property, which I bought 4 years back
For
for
3.5.
3.550 plus 1.5 we put into it almost, because of other renovations, the 16 units, plus I spent a lot of good money, brand new swimming pool, brand new this, the leasing office, we did restructuring inside, cafes were made and all that, and all that stuff, all that, yeah.
No, I mean, I think this is a great deal to kind of go over and kind of dive into a little bit. So, what was the financing like on this particular project?
Okay, the financing.
Not the capital raising yet. We're going to talk about that in a minute, but just specifically like the financing piece of it, the lender side.
Surely, surely. Now that also is a pretty interesting, the whole thing, I mean, I think I would love to share that, because that will be another caveat to the whole conversation today. I got a new loan broker. Okay, I'm not going to say his name. And the worst thing happened in my case was that he had a lot of other loans to write on, probably around that time. And he missed this one in getting it to a place where it should be closing on time. And he started with one particular company because of the 16 burnt units. We couldn't get Fannie Mae loan and so forth like that, or Freddie Mac loan, So it was a bank, I think a local institution in Los Angeles. I don't even remember their name, by the way, And he says, Vinny, I can get you 5.5% at that time, 5.5. It was high interest rate around that time. But then it kept on going to 6, 6.5, 7. I couldn't believe it. I mean, this was happening in front of my eyes, as every 2 weeks, this institution was increasing the rate. It was not locked in. And lo and behold, I definitely wanted this property, and I had given the application fee and all that money, and I'm dealing with this guy, and, I just can't back out. I'm ready to close. Literally what happened, Dan, in this case was it went to 9%. Can you believe it? 9% from
Wow.
6 to 9. I mean, it's unheard of, and the broker apologized and this and that. He even gave me some commission back, by the way, what he was making, just to, soothe me and all that. I said, it's your fault. I mean, I'm not a lender. I'm not a, loan broker. You are hired. I'm giving you 1%. I think I end up paying only 0.25, and he agreed to it or something like that, rather than 1%, usually you pay. But lo and behold, all that to say that this, property I had to close. Now, hold on to this one. I paid $650 because we were in Bethesda, Maryland, I remember. At that time, the closing had to be on Monday morning at the title company with my wet signatures. I get the paperwork on Friday. My attorney is getting all these things going anyway, but it's just, I paid $650 for carrying 4 pages. The Delta airline people came to my door. They picked it up on Saturday. They flew it, and then they brought it to the title company office 9:30 in the morning. Otherwise, I would have lost the deal.
Wow.
This deal.
So you had Delta have somebody pick it up to actually fly it to the property. That is great.
Oh my gosh. And I said, you know what? And the seller increased the price. On Friday, they said you have to pay $750,000 more if you want to extend it further. If you don't close on Monday, this is new terms. I mean, literally, this is what happened with this property.
Wow. So how did you end up going with that lender?
Oh,
that broker?
I did. I had to. and we did go through it. And they were also kind of trying to get into multifamily, I guess. They didn't understand that much. This particular
Was it a
institution.
local bank that you were working with, or
It
was it
was
okay?
not a local bank, actually, Dan. It was from Los Angeles, an institution, a group, actually. They
Okay.
had a 30 million, I think, fund. They were giving loans from the fund. So they were also pretty small.
Okay.
And I didn't know that. And then they came and, I met with them, and four people will come there. I'll fly in there. So I just kind of, went with them for about 6 to 7 months. Then after that, I said, you know what, I'm done with you guys. I mean, you don't understand multifamily, and they were keeping my escrow money, all that stuff. I needed the money. So these are all the ups and downs, right?
Yeah.
Then I said now I buy the third property, right? Third property within 3 months or so. February, 2 months, I bought third one, Terrace Villas. And I get a very great broker. I don't mind sharing his name, Brandon Brown from Houston, Texas, LMI Capital, and he writes loans all over USA. That was the biggest blessing I got. And the best thing was that he came to me through Terrace Villa. Terrace Villa was my third property. He gave me a proof of, uh, looked at my financial statement and things like that. He gave me a letter. Dan, this is a little story too, by the way. Again, Vinny is a storyteller. Everything just stays in my mind. So actually what happened was Fannie Mae loan gave me Albion. They couldn't give me Sienna Villa, second one. But third one, Terrace Villa, they gave me again, same people, Berkeley Point, very nice people. And they said, Vinny, you don't need a broker. I said, what? They said, yeah, we love your game plan and everything. And I met with the executive vice president. Our business lunch was half an hour, went to 4 hours. I
Wow.
spent $81 only. And this was like, they said, Vinny, you can just come. We'll do all the paperwork, everything for you. And you save 1% that you're going to pay to the broker. But because Brandon had given me the proof of, my qualifying letter, I told Brandon, once I close on Terrace Villa, I'm going to write you a check for $18,000. He said, what? I said, yeah, because you were the reason I'm getting this property, even though you're not doing any work whatsoever. Fannie Mae, Berkeley Point is doing all the work. Once I close it, I'm going to pay you 0.25%, not 1%, but 0.25 without doing any work. That was the start of it. Then when I closed the property, I wrote the check. Brandon called me. He says, Vinny, you're a different species. You're a very different guy. I mean, I didn't do nothing. Just that piece of paper. I just put your name on it and you send me $18,000 check. Anyway, to make long story short, he then approached Sienna Villa to local banks. Wow. So now he's writing my story, and the renovation I've not done yet, right? That started in 2015. So he wrote the whole story, how Vinny will be building this up and it's already improved and all that. Then the local bank gave me loan at 5%. Here it was 9% or 10% actually, when they increased it to 10 within 6 months or something. I cut it in half. So
Wow.
then I got a loan at 5%.
Now, when you did that refi, it was basically a refi, right?
Refi,
So
yeah,
when you
yeah.
refied at that point, 6 to 9 months into it, were
Yeah.
you able to pull out some of the initial capital, or was it still kind of in that renovation phase? You were just able to reduce the interest.
You got it. It was to reduce the interest, and then they gave me a little bit more money also, by the way. They gave me more money as renovation budget because I needed more money. I never did a cash call on this property. I've never done it, by the way. In the last 12 years, I've never done a cash call ever in my 26 acquisitions. Because what I've found is that because I'm strong financially, so I'm able to give loans to the entity for certain time, right? And at zero interest also, even though Kim Taylor tells me, Vinny, it says in the ppm you can get up to 10%, but I just feel like, it's like a family. My investors are my family. I have very strong 130 investors. They can bring me millions of dollars commitments in a day. But I just feel like if you're good to everybody, they will be good to you. They tell more people and more people and more people. I've only met 26 of my 130 investors, by the way, belly to belly. It's been all through FaceTime or Zoom or this and that. Anyway, but the thing is, you're right. The investors, I did ask the local bank to give me a little bit more rehab money, and they gave me, So that's how I was able to complete all the renovations and all.
And so how did you raise the capital for this project? Because obviously you were raising 1.7, a little bit more than 1.7 when you first took over this property.
Totally. See, I had been talking to, which I teach also, is that you've got to spin that plate of investors, because pre-existing relationship is very big in 506B, as in boy, because the investors need to be knowing where you are purchasing, what kind of business plan you have, teach them all through the newsletters, give them the positive news about the jobs, and hold the seminars, webinars, all those stuff, right? So once I got Albion closed, I raised 2.8 million, I think, for that one or something like that in November. And this is now December. I'm closing December 22nd. I needed 1.7 million. That's like 5 million right there, 4 million or whatever. So same investors base, I went back to them and I said, I know you just invested in one right here, but we got this one. But they were kind of going simultaneously too, remember? Because one closed 30 days later than other, right?
Yeah.
So they were both going simultaneously. And every time I find that, because I do webinars, quarterly webinar, right? Zoom, or I used to do GoToMeetings, I think at that time. But my investors will come in my PowerPoint presentation, I always sold them the next project. So it's good to have that built in right at the end of the presentation to thank them and show them the transparency and everything, and that they can, look for anything in the company. And then, by the way, I want to share with you this also, which is coming on the horizon. It's coming first come, first serve basis, blah, blah, all that, And I also started giving 2% interest on their money from the day they wired the money into the bank up to the day of closing, Dan. So this was something I taught my mentor also, by the way. This was in 2010, I think, I shared with him, because I'm able to collect 98% of the money. Can you believe it? I've been collecting 98%, 96 to 95 to 98% of the commitments. I never have lost my sleep, ever, in these 26 syndications, just because of that one small tweak that I did, because people were keeping money to the end because they want to earn interest. And the banks don't give you maybe, 0.15 or 2, or even CDs give you 2 if you, are doing 6 months or whatever. So I started doing it, and I tell them that as the first cash flow check will come, you will also get the interest from the day of wiring the money. That's when you're totally secure into the investment, first come, first serve basis, up to the day of closing. And then from day of closing, because mostly these were momentum plays, they were cash flowing already, right? With the 140 units and 191 units with Albion, and then 150 units, other ones, and all that. So I'm able to give my investors cash flow, from the very first quarter, and that helped them a lot. But I always used to sell, and now also, I am always giving them forward-looking, what's coming on the horizon thing. Right?
So let me dive into these quarterly webinars to your investors, because I don't think I've ever heard of anybody doing this before. So you basically, even if you don't have a deal, you're going to still do a quarterly webinar with them, and they just know that you do this?
Oh, totally. No. I do webinar with all investors, inviting them for each asset quarterly. instead of sending them a report of one-page executive summary, P&Ls and rent rolls and all that, I design a very nice PowerPoint presentation with the pictures of the properties and all. It's in the like a template, right? And then after that, we do a webinar for all the invite them in, and then as many can come in, we record it live, and then a link is sent to all the investors of that property, so that those who were there, they could go back and look at all my projections. And we introduce the staff, their pictures, we introduce the software. Like every property I purchased, and I purchase still, I do 4 monthly webinars first with the investors. Every month I do one to really share with them the closing statement. A lot of people don't do that. See, I want them to feel secure where their money is spent and what is happening, legal terms. So I share with them everything, the contract, the due diligence reports and everything, right? But then after the property is closed, first month is to take them to the closing statement and show them everything, what happened, where the money went, how it came, seller, repair credits, all that stuff. So second meeting will be what we have done to the property, introduce the staff. If we kept the old staff or the new staff, what are their qualifications and everything. So, and what we have done immediately within 1 month. So that's my second month, seminar, which I do with my investors. Third month, I try to show them the software we are using. See, a lot of investors don't really take time to fly all over and go to the property. I want to give them a feeling of the pictures. By the way, there is a gallery at the end of the PowerPoint presentation always. Every time I travel, I bring new pictures. And the officers also bring pictures, and of course the community manager, because we manage our own assets. We have 67 full-time employees in our companies. So that way, we have our own community managers, leasing agents, lead maintenance people, and the assistant to the lead, and HR director, VP of finance, all that in 4 years. All this we have done, all brand new companies, which we have, I'm total 100% owner of, my wife and I are owner of that.
So you didn't do your own property management in the beginning. You kind of did that in this secondary company about 4 years ago.
No.
Or have you always done your own property management?
Too, right. We actually hired a very good company, beautiful company from Dallas. They managed 32,000 units, by the way, when we got into this business, because we didn't know how to manage, right? So we did start with a company, but then we found out that, we were small, piddly people, right? Now I understand we should go to a smaller boutique company, in the range of the units where they can give you good assistance. And that's what I tell other people, because you can't start a company right away. So it took us about 1.5 years in my old company to start a brand new company. So that person we hired, professional, paid like 35,000. I always believe in that, because if we were to do our own, it will take us years and even do it wrong, So why not to hire a professional who came into San Antonio? I think I remember we have a head office in San Antonio with my old company. We have other offices, with my new company, but we have been managing our assets since 2010. So we have 2 acquisition companies, 2 management companies at this time, 1 education company. So that's the 5,
So once you've done these 4 webinars in the beginning to introduce them, well, I think you mentioned the third one, which was obviously the first one's going through, the first monthly webinar is going to go through the closing statement. The second one is going to be going through the staff on the property and what you have done that first month. The third one is going to be going over software, right, on the you're using on the property. And what's that fourth one doing?
The fourth one is to kind of show them, now it's been almost 3 months now, right? So the renovations. So the fourth one is built on what things have been done and how much we have spent. So we always like to bring in the slides, the capital improvement slide, CapEx, we call them, right? So that way this people can get a feeling, my investors can get a feeling what I showed them in the executive summary. We are working hard to accomplish those goals. And then, of course, in every PowerPoint presentation, every month, we are, oh no, the fourth month, we are showing now the quarterly also performance, right? So we also show the P&L quarterly, the rent rolls and everything, and show them how the rent roll looks like, kind of get them familiarized, and then also the P&L go line by line item to show them, where the monies are coming in, and then where the expenses are going down, where the mortgages, NOI, kind of teaching them. I always have felt if my investors are learning from me, educating wise, they will feel more comfortable. And they will also know that Vinny's here to protect their money. That's a huge part
Yeah.
because the investors, it's really ingrown. Like I said, I just started with 5 investors, and then they told more friends and more friends and more relatives, things like, and I have 130 now, maybe even more, 150 now, as more and more people are coming in. But the thing is, the more clearer we are, rather than throwing paper at them, just executive summaries, but explaining them nicely so that they can ask you questions and then you answer them in live meetings, that makes a big difference.
So when you're doing these you're doing these first 4 per property, and it's only to the investors that are in that particular deal, right?
Exactly. Right. Only those. Yeah, only those.
Totally. And so are you also doing the same thing? These quarterly ones are doing it for just these people in the particular deals, or are you doing a quarterly to all of your investors?
Okay. Quarterly is per deal. So if I have 26 deals every quarter, I mean, these have been totaled by now, right? Sure. So I've been doing like every single cluster of investors with one property every quarter. Yes.
Okay. And how are you? What have you done to find your investors? Because I know I've done some research on some of the things that you've been doing in the past, and I think you've talked about doing some like lunch and learns and various things like that. Obviously now you're probably in a position where you're getting a lot of word of mouth referrals and stuff like that, so you might not have to do that as much. But what are some of the best ways that you have been able to raise money or find new investors?
Totally. Dan, I have found that the best people to really promote your company are the investors who are there already. So by keeping them and abreast of and always showing them that you care for them, and then ask them if they know of other people, and that's where my referrals have been coming, where somebody said, I want you to talk to my daughter, talk to my colleague, or so-and-so. So a lot of people, when they give me the leads, I set up webinar just for them. Many times I get them also involved in the same webinar. I don't try to do 2-3 different investors together. That sometimes doesn't work because one negative can take down the whole ship.
I can definitely see that.
And then of course I'm getting a lot of my other calls are coming from my websites also, just to let you know. People are actually sending me, they say, Vinny, you're so genuine, you're so trustworthy. And I mean, some people say, I want to invest $500,000 with you, or 250,000 with you, or 200,000. So they fill out this form and have an appointment with me. So that's coming from my websites also. I have not done that much webinars, like live webinars in the restaurants or things like that. I haven't needed to. But when I do the meetup groups and have been to some of these podcasts, a lot of people have been calling me. So that's where most of my other investors have come. And once they come into it, then after even one season, they got the money, they're referring me to other people.
Yeah. And I think the way you're doing it is very good because you're having that open communication. That's one thing that I always try to, teach and preach is making sure that your investors don't have to, reach out to ask questions, just go ahead and answer those questions and,
Sure.
and diffuse a lot of those things ahead of time and have that open communication channel and be as transparent as possible, because the more transparent you can be, the more they're going to talk about you. And, as long as you're hitting those returns and even at the end of the day, if you're not hitting exactly those returns, they know you're going to be upfront with them and frank with them, even if you're not. And that way they know where their money is. And as long as their capital is being preserved as much as possible and they know that you got your back, that you have their back, they like that piece of it.
Surely. So true what you're saying. It's the transparency and being very honest, with them and understanding that, this is where the situation is. This quarter, the occupancy went down, the reasons for one down. Not only that, then how you tackled it. What aggressive marketing did you do? And showing them in, PowerPoint presentation, all the different bullet points, give them the confidence that you are not just letting it go, stray, but you are taking actions,
Yeah. Well, and I think that also, when you have multiple deals along the way, it also allows those investors to still feel confident to invest in other deals along the way, because a lot of times investors will hold back investing in future deals until they start seeing some of the returns on the deals on the deal that they're already in, especially if it's a newer investor.
Totally, totally. You're so right about it, Dan, and I'd love to mention it. I mean, we did do the very first one, Buena Vista Garden. I think we started at 50,000, but we started promoting to the investors. We just kept 50, but please go for 75 or 100. You could even do 150, things like that. Many times people gravitate to the lowest level of the investment. But then my partner and I decided way back, 10 years back, 12 years back, we're going to do 100 minimum. And that really was the best decision ever we took. By doing that 100, people had the money. See, if you tell them 25, they'll give you 25 just to try you out, or 50 or like that. But if you say 100, they will go with 100, and then they set the stage for bigger things, because a lot of my investors now have 500, 600 million with me now in several investments. Like, they come in every single one. I didn't even know when I met them first time that they had so much money in retirement accounts and, all these, cash positions, and they were entrepreneurs, doctors, attorneys, all the very high caliber people in California and across the, nation. So, and not only that, one more thing I would like to mention is their peers. See, if you're dealing with the high net worth people to start with, and their peers are also high net worth, then, they flock together. So by having that 100,000 minimum, got to 200, 250, 500, 700 now. I have some of my investors investing in my fund, 700,000, and 500,000 at a pop, So that helps a lot. Then you have less number of investors to deal with, of course. And then the, quarterly checks. We never believe in sending monthly checks, because I think people can wait for this money that they invest into the deals. They could go to the mailbox 4 times, mailbox walks, and pick up 4 checks. And the quarterly checks are much bigger checks, definitely. So that makes a big impact also. They remember more. If they are monthly checks, they just use them or whatever, like that. So that's my another thinking philosophy, that let's do quarterly. And we have never written a check in our life, by the way. Never, ever. It's all through the bank, through bill pay. We just set that. I'm sure a lot of your, audience does that. And that way, once it's set up as a investor, we just calculate the, returns and drop those numbers in. They print them out and they're gone. The best thing is there is history. I love that, because if somebody said, not too many say, what was the check and this, that, but then we also use Update Capital Now. .com, which is a great software company where my investors go in and they look at their whole portfolio at a dashboard. So it shows them everywhere they've invested, how much they've invested, how much they have made up to the last quarter, everything. and they can click on all the different assets they own individually and look at all the reports and everything over there, all that. So there are several different portals. I was trying to do it in my own website, and I paid even a gentleman in Pakistan, I think, $3,000 or something like that, but he couldn't do it. He just couldn't do it as robust as I wanted to. But anyway, but this company is pretty good. I'm sure there are other companies too, but so they have one.
Are you only accepting accredited investors?
Okay, you know what? Now see, the accredited and sophisticated investors I've been accepting for 26 of my syndications, 26. But the 27th one with my $50 million fund that I'm doing right now, it's advertised. It's at Monil, multifamilyfund.com, where my investors are coming in. It's 506C as in Charlie. So it's for accredited investors only. Yes. And I can advertise, as you know, that's the big part about it, because the other ones you cannot advertise in 506B and so forth as to pre-existing relationships and all. And then also, I'm glad you brought it up too, how my other investor base, see, some of my very strong investors also have so much other clout. So just like partner, we hear the term right now, you can become a partner on the GP side, right? General partner side. So that's something also I instituted way back. I think it was, 5-6 years back. I just said to myself, okay, we got, 40%. We were usually doing 60-40 because the deals were pretty strong. So my investors get 60, we get 40, or 70-30 first year. Then we bring it down to 60-40 and 60-40 all the way. So out of the GP side, I said, let's give 30% for raising money, so that we can allocate, have people come into the play, and then you give them jobs because you can't pay them commissions, You have to have the jobs and then let them do this, that, talking to the investors. And I don't have too many partners, but because I have so many of my own investors, like that.
So I'm sure that there was probably some, concern or trepidation in the beginning going from 50 to making the minimum 100. Did you have a lot of pushback from the investors, or were they just kind of all okay with it?
Good point, Dan. I would say, looking back at it, just like 10, 11 years back, I think we might have, have lost some people, I guess is the word, right? Because they didn't want to go to 100. But once we set that stage at 100, it was fine. I was so surprised. I was very, very surprised. And I think—
Was it easier to raise the money?
Yeah, it was. It really was. I was very, very surprised.
Yeah.
And then once we did our second property, third property, then everybody knew that it's going to be 100. So then we were able to get into the self-directed IRAs and 401ks and all that, And then I talked to Gene Trowbridge, who, by the way, Gene Trowbridge and Kim Taylor have done all my syndications, the best people in USA. I mean, a lot of other syndication attorneys are there, but they've done all my 27. And, so the thing is, they told me, they said, Vinny, if it's the same investor, they can bring cash and also IRA money, but it's the same company, they could split it. So they could bring some money from the retirement account, like 50 or 60 or whatever, and some from the cash. You set it up as two investors, entities, because the self-directed money has to go back to that account. They cannot cash that. But in the cash account, you send the check to their home. So that's how we did it, So that way they were able to still bring 100.
That makes sense. You kind of split it up between like maybe 50 from the IRA and 50 personally, and just set them up as two different separate entities or something like that.
Totally.
Yeah, that makes sense.
Yeah.
Well, as we wrap it up here, I have a last kind of twofold question for you.
Sure.
The first one is, on Azalea Court, remembering back to that particular asset, what was the easiest thing during the entire process that maybe you thought would be a lot harder, but it ended up being really easy?
I'm so glad you're asking me that. I think by having a good manager helps a lot, because as we manage our own assets, that was huge. The maintenance person still lives there. He was there 14 years before. So 4 years with me, that's 18 years. And he lives resident manager right there, lead maintenance. That helps a lot. But then renovation schedule, I was able to get some good contractors to do it. I thought it'll be harder, but it was, it was all right. And then by restructuring how I wanted it with the cafes and the, resident center and everything, by doing the swing pool, and also the ease was increasing the rents. With the jobs being there, we were able to take the NOI to a new level. That's why I'm able to sell at 8.5 million, which will be profit of 3 point some million for my investors and us, 3.6 million or something like that.
Yeah. And so the second part to that is kind of contrasting it. And what did you find was the hardest thing on this particular deal that maybe you thought would be a little bit easier, but ended up being a little bit more challenging?
I would say financing. Dan, if it just kind of brought back the old memory, how I was, facing all this situation. I always take everything at a chin, challenges there. What's the best way? What's the right thing to do right now for keeping the investors' money safe and everything guarded? And, so that financing phase that I went through in the beginning for about a year and a half, kind of was trying, that was the big.
Yeah. Well, Vinny, I really appreciate you taking some time to be with us here today and kind of sharing us all of these insights and even some additional golden nuggets throughout. And I know I took quite a few notes on this, and it's these types of podcasts where we really dive very granular on different projects. I think is very important. There's a lot of lessons to be learned, a lot of different things that we can take into our own syndication business and various things like that. So I really appreciate you taking some time, and looking forward to seeing you again at another future event. And when I get out there to the San Francisco area, I'm going to definitely try to look you up.
I would love to take you out for lunch or dinner, and it'll be my pleasure, Dan. You and Vinny have been just tremendous friends, and I appreciate you both. Thank you. And if anybody wants to reach out to me, I'm also on Google and YouTube and Facebook and all that. Do you want me to give them any information, or?
Sure. Yeah. Go ahead and share with the listeners how they can reach out to you if they have some future questions on this particular deal, or maybe they want to be join you on maybe one of your future deals.
I would love that. I would, of course, you could also partnership with me with, in raising money, of course, and learn my tricks of the trade and my brochures and everything. I provide everything, no holds bar to my partners. And then also as, even bringing a property, that's the other thing too, with my fund, $50 million fund, that I have equities raised already that we can jump into the deals. And the best way to reach me is to email me, Vinney, Vinney, at VinneyChopra.com. So that's easy. My website is Vinney Chopra with a E in there. Some people spell like VINNY, but please put E in there, and VinneyChopra.com. And the other easy way to text me is to word syndication. Text it to 474747. So 474747. Just text the word syndication, and I can get back to you, or my team will get back to you, and we can answer all your questions and everything.
Well, I'll make sure we have those listed out on the one sheet summary that we'll send out with this particular podcast as well. And again, thank you so much, Vinny. I've really enjoyed talking with you, and looking forward to having you on a future episode as you close more deals.
Thank you. Thank you so much, Dan. God bless you.